Sanjay Singhania, the MD and CEO of Epack Prefab, will be joining us. A warm afternoon to you, Sanjay. First question from our side is looking at the initial numbers. A lot of discussions has been undergoing, regarding your performance. Just in your own words, how has the Q3 numbers been?
Yeah. So, Q3, I think has been very satisfactory for us because we look on, quarter on a year YOY basis. So, while the market is looking at it as a quarter on quarter basis, it is important to look at YOY basis in our business because, ours is a kind of a seasonal business which gets affected by the monsoon. So in this quarter, typically what happened with us was, we could have some added another 30-40 crores of revenue. We couldn't do it because the metal was lying in our FG and the billing could not happen because of site conditions. So that is one of the reason, where I think we could have done better. But in terms of overall revenue growth, if you look at YOY, then the prefab business has grown by 31%, and overall at a company level we have a revenue growth of 22%. So I think it's a good performance overall.
Right. Hi, Mr. Singhania. Varsha this side. Last time, Mr. Singhania, when we spoke at NDTV Profit, you said that Q3 would be impacted, and that's what we are seeing. Just wanted to ask you, now that Q3 is over, what lies ahead in Q4? Now, why I'm asking this is because H2 is preferably a stronger second half for you. How much growth is expected when it comes to Q4?
Definitely, I think it will be one of the best quarters for us in this FY. There are various reasons to it. So the first is we definitely have a very strong pending order book with us. And the good part is most of the projects which are there on the floor, the engineering drawings and approvals have already been done from the customer side. So now, we just need to deliver, produce and deliver to the site and do the execution work. So we are very confident that, the revenue guidance which we have given to the market while going public, the guidance was around 1,500 to 1,550. So we continue to maintain the same guidance and we are very hopeful to achieve this target.
Understood. And what about margins, Mr. Singhania? Because this quarter, the margins were around 10%. Overall for, FY26 and maybe, for FY27, what is the targeted or aspirational EBITDA margin that a company is even eyeing for?
Yeah, we have always maintained the margins would be in the range of 10.5 to 11.5%. So that is, what has been done in the past as well. Our 9-month margin is 10.8%. Yes, in the last quarter, the margin is 10.1% because the revenue, as I said, couldn't be achieved. A lot of stock was lying with us. So the employee cost, got up, was about 200%, 200 basis points more. But in this quarter, I think, we'll make it up. And margin will be 10.5 to 11.5% going forward in FY27 as well.
Understood. And Mr. Singhania, the current hot topic in the market is, considering the inflation. What is the impact of inflation on raw material for you and how you're going to manage it?
Yeah, it's a great question. All the commodities are rising these days, and so is our major commodity, which is steel. It's a major raw material for us. Steel has, gone up twice in this month already. So there's an impact of around 3,000 rupees a ton. But in our business, the good part is we already have an inventory of 1.5 months as a raw material, and then another, we have a long-term purchase orders given to the steel mills. So which covers us for the next 2.5-3 months. So for this quarter, there won't be any impact on us. And in our business, since we book orders almost every week or every month from various customers, so the existing prices on which we are buying the steel, we are booking the new orders. So on a gross margin level basis, I don't see any challenge, this commodity prices will have on us.
Sir, just let me be clear on that. So in Q4, you're not going to see any impact of higher commodity prices on your margins. I got that point. But what about in FY27 or, of quarter 1 of FY27 or quarter 2? Will you see any pressure in margins because of the higher commodity prices?
Yeah, that is what I think I was trying to tell, that we don't see this happening, because like new orders which we book into the system are as per the current rates. So every time, even if the prices go up next week, then the next week orders will be booked on the new prices. So more or less, over a period of quarter, more or less, like the things normalize for us. So it has never happened in the past. The only time it happened was in the year 2022, March, when the steel prices went up by 40% because of the Ukraine and Russia war. After that, like this 5-7% increase or decrease in the raw material prices is always taken care of by the system itself.
Understood. And sir, just wanted to have an update on your order book. What is the current order book that you have, and what's the timeline to fulfill that order?
Yeah, our current order book is 1215 crores right now. So that gives us a runway for the next 7 to 8 months. And as we speak, in this quarter also, we are very hopeful to book some of the bigger orders. So we have placed, Epack has placed itself very uniquely in the market by being a preferred player in the renewable and energy sector. So most of the solar companies and the renewable energy companies are coming to us as a first preference because of our speed of construction.
All right. Thank you very much, Mr. Singhania, for taking your time and clarifying whatever queries the research team had put. Thanks a lot, Varsha, for a very detailed analysis for this company as well.